Well, hello and welcome to this week's edition of the Cashflow Options program. So, thank you for being here on YouTube. Now, we reset the opening range on the first trading day of the month, and we are now in bearish opening range mode. We set it on the 1st of November on the Tuesday. We've got a high here of 3911. Anything above that, we're bullish. Anything below 3843 on the SPX, and we're bearish. So we're bearish right now. We had 4 down days. Now, the reason for that is we had two lots of bad news, a double whammy of bad news, if you like. We had the Federal Reserve in their November meeting producing a rate rise of 0.75% or 75 basis points, and basically said through a series of hawkish comments that they have no intention of stopping raising rates anytime soon. Now, on top of that, on Friday, we got a super hot jobs report, and the labor market is still strong. What does that do? That gives the green light to the Federal Reserve to continue to raise rates rapidly and very aggressively for the foreseeable future. So a double whammy of bad news, if you like. And what we also got is the dollar, though, moving down on Friday. So when the dollar goes down, the US dollar goes down, the markets went up. So that's what we saw on Friday. But generally speaking, the markets were selling off as a result of that bad news throughout the week. This week, we've got the CPI coming out, the inflation itself. We seem to have something going on with the Federal Reserve or inflation every single week in the market. Some sort of news here, but CPI is coming out. The CP lie is what I call it, because it is so far from accurate, it is ridiculous. Times it by 2, and you're starting to get closer to what the real inflation number is. So they're expecting 8% inflation. Last time it was 8.2%. Anything well above that, markets will sell off. You got core CPI, which takes out food and energy. It's ridiculous. Good luck living without food and energy. But last time that was 0.6, now it's 0.5. Unemployment claims were 217,000 previously, and they're looking for it to be around 220,000. So CPI coming out an hour before the market opens on Thursday. Everyone will be fixated on that. Keep an eye on that. If it's well above 8%, markets will sell off. Also, the US dollar has been in a strong uptrend in this channel since April. It broke that and then got above it, right, and then just sold down below it again on Friday. So keep an eye on that, because we're in that uptrend, but we've broken that to the downside now, and we're also in a short-term downtrend, as you can see here, right, in this channel. If we were to break the lower channel, then the markets would rally. However, if we break above this midterm downward channel and start to move back up within this uptrend, this longer-term uptrend, markets are going to sell off. So I still think moving forward we're going to see further selling, and we're going to keep a close eye on that. Number of stocks above their 50-day moving average is now over 50%. That's significantly more than where it was last month. And the skew, perceived risk of a market crash, is very low. Anything below 115 is bullish. Okay, smart money is not worried about market crash right now. Trend at 0.76 is neutral. Combined put call ratio is at the 10-day moving average is at 0.99. That is bullish. The SPX put call ratio below 1.75, down at 1.47, is bearish. A few mixed signals there. The opening range is bearish, but for me, CPI this Thursday and the dollar are going to be two things that I'm watching very carefully. So with that double whammy of bad news and the markets moving down, bearish opening range mode, Federal Reserve raising rates, we're not going to stop anytime soon. Job market's strong, so we can keep raising rates, okay? With that, what happened then to Bitcoin with that double whammy of bad news? Well, what it did is it actually finished up 2% for the week. So it actually continued to go up. Now, when you get two lots of bad news like that, and then the markets going up, in this case crypto markets I'm talking about, going up, that normally signifies a bottom in the bear market. That would normally signify a bottom, right? It's going up on bad news. That's a very good sign we're at the bottom here, or very close to it at least. So I'm looking for Bitcoin certainly in early 2023 to really start rallying. It looks like it wants to break out now. It's broken above this downward sloping channel line as well. It's above 21,000. It has been moving up when everything else has been going down, and I'm looking for this to move up. So I do have a position that I'm looking to get into on MAR, looking for MAR to get above $12.50 with a call debit spread here. It's been holding this $10 support level very well, where everything else has been selling off. Some stocks are down 75%, like Meta, for example. Many stocks down 50% or more from their all-time highs. So this stock is sort of just going sideways here, as has Bitcoin, but Bitcoin's starting to break out. This Bitcoin mining stock could have a bit of a move as well. So we're taking a small trade there, looking for it to get above $12.50 in the next several months. So that's what I'm looking for there. You may look at Amazon being a little bit oversold right now. You know, if you have a look at it on a weekly, you can see it's a pretty strong level of support. If we look at it on a monthly, it's broken the 100, but very strong level of support there as well. And if we have a look there, we can see right now it is severely oversold, well below 30 on the RSI. And if we have a look here on the Bollinger Bands with Amazon, it's down below the lower Bollinger Band, or sitting right on it. So that's normally getting too stretched to one side, the elastic band getting too stretched away from the 20-day simple moving average, and it's likely to snap back. So it could have a short-term move up. Massively undervalued stock. Massively undervalued. So, you know, to nibble at that now, maybe selling the 90 strike for $4.75 for the 16th of the 12th expiry, looking to own the stock moving forward, I think that represents some pretty good value. As far as a bearish idea goes, Brown, looks like Brown & Brown Insurance Company, looks to me like it wants to move down. Now, this stock, if you have a look on Friday, was down 1.36%. The industry it belongs to, insurance brokers, and the sector it belongs to, financial services, were both up, and this stock was down by more than 1.3%. So that shows relative weakness, and that's certainly what we saw there on Friday, right? Moving down, right? Down 1.36%. And look at every sector was up by more than 1%, and this stock was down by more than 1.3%. That is relative weakness, no doubt about that. So it is also the 50 is below the 100, and it looks bearish to me. So I'm looking for this to move down, and I believe that we could see a pretty decent move down in this. I'm going to buy the 60 strike put option, okay, going out to the 16th of the 12th. Okay, so that's what I'm looking to do there on Brown & Brown. I'm going to set a stop at $4. I'm risking $145 a contract, and I like the look of that one going forward, right? So there's a bit of an idea there. Also got an idea with Tesla. Huge open interest on both the calls and the puts at the 220 strike. Looking for it to pin there, setting up a butterfly. Sell 2 of the 220 calls, buy 1 of the 230, 1 of the 210 for $162 a contract. So only $162 a contract. Potential upside is obviously significantly higher than that, $8.38. I'm looking to make a 3-to-1 return on my risk. Okay, so I'm going to set my profit taker at $240, stop loss at $80, looking to make $240 with a risk of $80. Pretty good deal. 3-to-1 asymmetrical risk in my favor. So that's another idea there with Tesla. So that's what we're looking for here with the overall market. Keep an eye on the US dollar, okay, for this week. Obviously inflation on Thursday before the market opens. Look at this mini channel. If it breaks above the upper line, then the markets are going to move down, right? Keep an eye on that. If it continues to move down, breaks below the lower line, the markets will go up, all right? And obviously inflation, is it going to be above or below 8%? Above, going down, below, more than likely moving up. So that's what we're looking at this week. Keep an eye on that. There's some potential ideas that we're looking to get into, and we will talk to you all again next week. Thanks so much for listening. All the best, and bye for now.